Hi there, my name is Troy Anderson. I'm the Director of Solution Sales at Finastra for the U.S., and I will be moderating today's session, focusing on the modernization of consumer and commercial lending for a fast-moving market. And by fast-moving, I'm referring to the movement of technology to the cloud, machine learning, AI, even product-specific analytics, all of which has enabled an explosion of 24/7, 365 non-traditional lenders and other financial services to grab market share from the traditional financial institutions, or FIs. The embracing of change by these non-traditionals and the success they've had during this period is forcing the traditional FIs to take action, albeit at a slower pace. To that point, a recent study found that while 91% of traditional FIs are using some form of cloud-based solutions, only 9% of them are using for mission-critical systems. In a market that's set to grow 22% in the next 5 years, this amounts to a huge advantage for those who can implement new technology efficiently and effectively. Let's learn more about this and other topics by introducing our panelists who will help us lay out the blueprint for moving lending to the cloud. First off, I'd like to introduce Mitch Lucas, who is the Vice President of Product Management for the U.S. lending business for Finastra, including the Fusion suite of Laser Pro, Decision Pro, Deposit Pro, and Credit Quest, amongst others. Sitting next to me is Lauren Reese. Nice to meet you. With 20 years of experience in both commercial lending and credit risk management, Lauren is currently a Senior Vice President of Portfolio and Credit Risk at TBK Bank, headquartered in Dallas, Texas. And lastly, we have Yoram Beckler. Yoram is coming to us via video today. He is a serial entrepreneur specializing in financial identity of businesses and individuals for process efficiency in the lending space. Currently, Yoram is the CEO of AIO Verified Business Identity, which is a leading partner of Finastra's and included with our Total Lending Cloud offering, solving the many problems of onboarding document collection for traditional and non-traditional FIs. So welcome everyone. Lauren, I'd like to start this off by asking you and talking to you about the disparity that has existed pretty much forever in the banking space between consumer and business borrowers' expectations and what the bank can provide. A recent study actually showed that most businesses have an expectation of funding within 7 days, while 1/3 of those expect 3 days. So on the business side of things, there's a disparity in the fact that this same study found that the bank's decisioning process took roughly 26 days, so a big gap. And the question is what are the challenges that you feel FIs in general are facing in reducing their turn times to keep up with the ever-growing competition who's able to meet or exceed some of these funding expectations?
Absolutely. I think it absolutely pans out that consumers expect the quickest turnaround. And they do that because they have the options to get the turnaround. They don't have to wait, so why would they? Yeah. Small businesses absolutely plays out that they expect quick turnaround times. I think within 3 to 5 days rings very true, and I imagine a lot of my peers in banking would echo that. And then we found that, for larger C&I deals, you might have a little bit more time, but the customer experience is very important. Right. And so technology may not as much be used to drive that kind of 3 to 5 day speed, but it absolutely should help drive the customer experience. I think the main challenges to get over for most banks are, I've kind of summarized it in my head, is money and mindset. So obviously, with any technological solution, there's an initial outlay of cash that can be intimidating. And it's not just money to purchase new software or new solutions, it's resources. Implementation takes resource and time from those in your organization who would otherwise be doing other things with their time. And so that can be an intimidating kind of initial outlay. The other thing though is the mindset, and I think that's kind of the counterbalance to this, is that you have to understand that you're either gonna pay now or pay later. And so you either pay now for the solution to make you competitive and help you get those solutions to the customer, or you pay later because you're not competitive, you lose your customers, you lose the opportunities, and you're not bringing in the income and the customers you need to sustain your business model.
That's an excellent point. Mitch, would you like to add something to that?
Well, I think Lauren's spot on. As we help our customers with their needs in the technology space, we consistently find that momentum in their current process is the biggest challenge that keeps them from moving forward. And I think to play on what Lauren's suggesting there, the leadership of these institutions needs to have a budget for the outlay and for the mindset to change. You have to give your team space to go do that, and you have to adopt the technology that's going to help achieve that. So I think my response is very similar, maybe a variation a bit on how you said it.
Yeah. And so, Yoram, I'd also like you to address this, but I'm also curious for the group here, the differences between, let's just focusing in on traditional institutions, $300 million bank versus a $5 billion bank. And I think it's a unique set of challenges for each of those, in particular the mindset, for some of those smallish banks, because they just don't feel like they're losing that touch, when in reality they're actually improving the customer experience of whom they've had those relationships for so long, and they're able to provide better and easier for them. So Yoram, do you have any thoughts on that?
Yes, actually we spoke to dozens of banks, and we identified three key competitive challenges. One is, like you mentioned, it is scaling up, processing more loans with the same team. Second is the flexibility to be able to respond to the needs of the community with new loan products. And third, and I think I'm connecting to what Lauren said, the time to market, the ability to deploy integrated digital solutions in weeks rather than in months. Especially with lending, we see that the main KPI is lead to funding time. And this cycle needs to be in days, not in weeks and not in 5 days. It needs to be very fast in order to compete. And for that, they need to digitize, they need to automate their bottlenecks. For example, being able to get documents and extract information and deploy it, populate it to their decisioning processes so they can make a decision in minutes to respond quickly to their borrowers. This is a prime example of things that needs to move much faster.
Great. Great information from you. So moving on to the next question, which has some similarities. And Yoram, I'd like to address this one to you. To compete in the future, how can traditional financial institutions get into position to compete in the digital world, building their own technology or partnering with a fintech? And how do you feel that banking as a service plays into this?
I think if we look at Kabbage, at Lending Club, or as online lenders on one side, and if we look on the investments that the giants like Bank of America, JPMC, and Wells Fargo invest in digital banking, I don't think it's competing in the future. I think it's almost competing in the past. and looking on the advantages that community banks, credit unions, and those regional banks have is the social currency that they have, the relationship with their borrowers. And in order to be able to serve these communities better, they need to couple it with digital solutions. I believe that digital solutions today must come in the format of cloud because it's fast to deploy, it's fast, it requires less resources on the bank. And this way they can leverage their relationship with their customer coupled with fintech agility using cloud platforms. So I think adopting external cloud platform is the way of the future.
Okay. Mitch, what are your thoughts? I think I kind of know what you're going to say, but I'd like to understand your thoughts. And I've experienced, even some community banks that have tried building their own platforms with varying levels of success. And what has your experience been?
Yeah, certainly I've got a bit of a bias working for Finastra, but the reality is, what's the core value proposition that these institutions that we try to enable? What is it? It's not building technology. It's that relationship with the customer, either in a small business or even on a personal level. Those are the things that matter. You create trust, you create experiences for those consumers, businesses and consumers that matter. And that's not about building the technology, that's about deploying the technology and finding the pathway. And it's fairly complex, I'll admit. finding that pathway through a combination of what, say, we provide or others provide in the market, and bringing those things together in a competent and successful way. That's the challenge for these institutions, is how do they do the combination of that technology to serve what is their core competency, that trust and that relationship building. So I think that's through cloud. I think it's through systems that are intended to be open or have thoughtful plans around being open and accessible. That's what's going to matter for success today and 5 years from now.
Yeah. And I think we're going to see that expand with FusionFabric.cloud. We're already seeing that, with lenders or vendor partners such as Yoram and his companies being available for that to add on on an ad hoc basis, add on different things that are particular to those banks' markets. And speaking of that, you're in a big market, Lauren, in Dallas, and I've worked there myself, and I'm curious to know how you guys have handled this throughout the last several years in moving to technology, and when have you guys tried to build anything on your own? Or have you just focused on Finastra as your primary partner?
Yeah, I'm going to speak mostly to our community banking activities. We do have other activities that might have different answers, but no, we're not building our own solutions. Okay. Partly, I loved your answer because you were saying that we don't want to be tech companies. I mean, for most community bankers, and if you put it in loan speak, you always talk about we don't want to own a manufacturing plant, we don't want to own a retail store, we don't want to be operators of our businesses. You don't want your loan to fail, and you don't want to become the owner of that business. Right. And so it's the same thought, it's the same mentality, is that to try to kind of get out of your area expertise usually leads to trouble. And there's just so many things you don't know what you don't know when you do that. And so I think you have to be really committed and really careful if you go about doing that. I think most community banks would leave that to the experts, so to speak, and find partners in the market that could help them solve those problems. One of the things that I think about when I think about kind of how we partner with people is two things. One, I think that a lot of us in banking, you go through all this work and you use all these resources and you partner with someone and you implement, and it's great, and you're using it to its full ability, and then 5 years go by. Well, they have, your partner has probably completely evolved their product at that point in time in a way that you cannot even imagine, but many banks don't invest the energy or resources to stay up to date with the solutions offered by their partners. And so even when you have partners, you can quickly find yourself out of market in terms of the competitive advantage you have when you initially thought you got it, because you're not even staying up to date. So that's a challenge I would pose. The other thing I like to think about is just the mentality of going from the right way to the best way. And one of the things I think about is when you think about a right way, in your head something happens and you think that everything else is the wrong way. So you kind of automatically reject new ways of doing things or new ways of looking at things. This kind of goes back to that mindset mentality. Right. Yep. If you think about trying to find the best way to do something, kind of automatically by that word, you want to go evaluate lots of options to understand which one is best. And in this constantly changing market, what's best can change over time. It doesn't stay the same. Yep. So I think kind of shifting our mindset to try to think about what's best instead of maybe what's right, or has, the way I've always done it, what's always been right, would be helpful.
Yeah, Troy, if I might add,
go ahead.
Your statement about customers using a piece of software, installing it, having a great first year, but 5 years later the software has evolved. The software does evolve, and the things I build are not the same generally as they were 5 years ago. The core values there, but we find customers who haven't changed their loan products in LaserPro for a decade or better, and we just, how is this possible? There has been so much, A, regulatory change, B, process improvement, C, third parties like AIO that have come along. How can you not take advantage of these things? So it's true. There's a significant number of bankers out there who have avoided the mindset of change and trying to find that best way. So I just wanted to highlight that point because it's not just your experience. Right. It's really a market problem. And in my humble opinion, those are the ones that are not going to survive the next 10 years. And is that a conscious choice you're making as an institution to not survive for the next 10 years? I don't think so. So to survive, you have to adopt that mindset we talked about at the beginning of change. There has to be a budget for it, mentally and financially.
Yeah.
Yeah. Yoram, do you have anything else you want to add? I know you've already addressed this one, but based on what we were just talking about, I'm assuming with your breadth, of knowledge and history, anything else you want to add?
I fully agree that banks need to embrace a culture of innovation and to balance it with the knowledge that they have with the existing teams, that loan specialists, that credit officer, the underwriters, they know what works and what doesn't work in their processes, and to help them embrace new technology. Not only they can compete better, but they can become change agents in their communities. They can bring new innovation and serve their communities better, and of course compete and grow their business in a much better way.
Great. A lot of good information there in conversation for sure. Let me move on here. So Lauren, going back to you. Hopefully you don't need a drink of water.
I'm good.
Talking.
I'm good.
Historically, financial institutions have focused on hiring candidates with financial backgrounds. As the industry continues to pivot towards technology and innovation, how is this affecting the hiring practices of your bank in particular, but then also other ones that you're familiar with?
Yeah, obviously, I think the traditional finance accounting is going to remain important. So it's not that those are not important. But the way I look at it, the more technology takes place, and I think of technology, the way I try to think about it is it's about helping us leverage, organize, standardize, and use data, right? It's all about data.
Yeah.
And so I've been really trying to focus, even just specifically on my team, to bring in people with skill sets or degrees in statistics, data analytics, to try to, because I need to understand data. I need to understand that, and that's not my specialty. That's not, I don't have all those skill sets, and so I'm trying to reinforce those on my team and have them work hand in hand with the credit and lending side, not as a separate department, kind of distinct in a way, and they've got all these other focuses, but kind of as part of our team, so we can begin to lean in to the purpose of these technologies and maybe speak the language a little bit better than we have in the past.
Great. Mitch, do you have any thoughts on that?
I think Lauren's on to something that the traditional ways of hiring at financial institutions or even here at Finastra are just, they're dead. Don't do the same thing you did 10 years ago. I need people who are observers. I need people who can understand what the customer challenge, what your job is, and the pain around that job. I need people who can then take that information and with the data, ours, others, yours, start to work through how we might automate those things. Yoram's product with AIO is a perfect example of how you take the various disparate parts of a challenge around data and solve it. And those things happen only because you have open-minded people who are observe, who try to come up with a process around that and go solve it in an interesting way that produces an ROI for you. That's our job.
Right.
Help you produce an ROI.
Yeah, absolutely. Yoram, your thoughts on this?
I fully agree. I think it's a matter of culture of an organization to be able to be flexible enough, to be open enough, in order to compete in an environment that, a product that was right a month ago changes to something else tomorrow, and then we have a worldwide event that changes everything again. And if the culture is not a culture to embrace innovation, and I think to solve things also with technology, I think it's very difficult or almost impossible to compete if you don't have that culture.
Great. So Yoram, back to you again. There are still FI executives with concerns about the cloud and overall security. Cloud-based banking could be the solution for them to embrace the digital-led growth. But what type of support is needed to push the industry over that line and make those appropriate technology investments to modernize, their lending processes?
I think there is some concern that is a bit of a legacy concern about security in the cloud and moving to the cloud and not having full control of the systems that are your critical systems. But I think we can look and learn from other financial segments. For example, the payment industry is completely on cloud infrastructure. There is no thought today of not using the cloud for the payment industry. Online lending has been here for over a decade. It's on the cloud, it's very secure, and I think it's a great example of a proven cloud solution that works and turns billions every year. And I think, entire states are moving to the cloud. For example, Israel, where I come from, the entire government has moved to the cloud. And I think it's a widespread acceptance that cloud solution can deploy fast, they can do things that other solutions cannot do. And cloud solutions can have security capabilities to the extent that no point solution that is on-prem is ever going to have, because they need to be mindful of so many things. They must put the most cutting edge technologies there. I think there is also another thing to look at, aside from that security concern and that concern about legacy systems, are the benefits that cloud solutions have. For example, AI. We think AI can only live in the cloud because it must have huge training sets. It must have a very large variety of training sets and samples in order to do things right. And to take an example, the IO, the way that we today can extract, for example, an address out of any utility bill or extract a balance from any bank statement is only possible because we see such a huge variety of samples, because we are a cloud solution, because we are able to train our model based on many samples from many places. So there are concerns, but I think the advantages are way much heavier there.
Great. Mitch, what would you like to add to that?
I think it's pretty simple. Oren kind of hinted at it. The cloud is just a computer somewhere not in your building.
Yeah.
So it's got the advantage that you're not having an IT person in your basement, making sure the lights are blinking, making sure all the systems are running, and yet it's even more. Microsoft Azure is the technology that we're going to be using to deploy LaserPro's cloud version here in a couple of months, and it's got capabilities and power around security that we can't really replicate. Microsoft has accomplished that at scale, and therefore the price point for us to deliver that service to our customers is going to be very competitive compared to if we had to invest in that security, say, for ourselves. Right. And then the other side of that, maybe not AI yet, but the other side of that is products and services that we'll be able to bring to market, because now we have an anonymized aggregated data set. We'll be able to do some very interesting things for our lenders that, as I said, deliver on that ROI.
Right.
I mean, you've got things that need to happen that could be very useful to you in that lending cycle, and we at Finastra will be able to deliver that shortly. So those are really big upsides. So I don't know why there needs to be any necessary tipping point. I don't know what the answer to your question is, but I know that it is going to happen. Right. It's just a matter of evolution. It's a matter of change, and us as one of the companies that is a provider to the banking solutions, starting to help make that path viable with one of our solutions, among others. There are others at Finastra, but I'm just working on the one.
Absolutely. What are your bank's thoughts on this, or does your bank have any stance on that?
It probably depends on who you ask at my bank.
That's a great point. It's probably every bank, actually, every FI.
Yeah. So, one thing I will say is that from the banking perspective, The fear and the concern is real, and I understand it, because as a bank, these are your customers. And if something happens to their data, that's your responsibility. And so the fear and the concern is legitimate. And so it's not something that's just, oh, don't worry about that, you know. But that being said, and I'm hardly an expert on technology issues, but at my bank, as I've kind of been able to be part of different conversations, what I've come to learn is whether you're using cloud or not, the risk is here. So phishing, ransomware, I mean, the kinds of ways that a bank could be compromised if they used zero cloud-based services are scary.
Yeah.
And they're constantly evolving. There's constantly new vulnerabilities being found. And so, kind of as you said, like now the bank has responsibilities that it didn't have in the past to make itself secure and protect its customers' data. And to a degree, I do feel that banks are starting to feel the pain of that, and just the massive undertaking it is to keep data safe. And I think that realizing that there are cloud-based solutions that bring with it built out infrastructures and security and things like that, I think it is changing the conversation, because keeping the bank safe on your own, cloud or not, the world has changed, and it's going to get harder and harder.
Yep. That's great. It's there's definitely a lot of outsourcing going on with people like your bank and others, and like we're talking about today, modernizing the lending experience both for the banks as well as for the clients is certainly going to be heavily based on the cloud and the acceptance of that and realization of, you know, great security, you know, experts in their field, you know, taking care of these things. Any other thoughts on this? If not,
I can say from a first hand, you know, we are a technology company and we just have laptops. That's it. There's no infrastructure. There's nothing local. We can work from anywhere. And the security measures that we can get from cloud providers like Microsoft that Mitch mentioned are way beyond what a normal technology company could have accomplished by itself. So I think it is just a power multiples rather than threats, because like Lauren said, the threats are out there. There's no question. But if you have a big partner like Microsoft, AWS, Google, and all those to help you mitigate those, this is an advantage.
The power of multiples, we're going to put that in a brochure or something. I love that statement when you just made it. It hit home for sure.
Yes.
So we're to our bonus question. And Mitch, since we haven't started one round with you yet, I'd like to address this to you first. And I want all of your opinions. And what will the lending process look like in the next 5 to 10 years, in your opinion?
Well, I love this question because it forces us to put on a hat in the future and kind of imagine what are those jobs and what the pains will be. Fundamentally, lending is not going to change. There is an interested party. There is a financial institution or a fintech that's got access to the money and is going to make a decision. And then there's a process of closing, executing, however you might phrase that, on the transaction and funding. Those fundamentals aren't going to change, but I think the pieces and parts will be interesting, very unique. There might actually be the death of paper, which, you know, that would be a good thing.
Right.
I still see it and I still wonder, how is this possible? But if you're going to have the death of paper, how might you have artifacts that are easily transferable around in an ecosystem? And I think if I were to put my hat on as an individual or a small business person, I will have a safety deposit box of my financial information, whether it's a W-2 or a 1040 or an 1120, or, you know, my corporate incorporation papers. And, you know, all of those things will be easily accessible, and it will be as much easy as I'll swipe from the safety deposit box to my institution, and that information will flow to the right party in the right way at the right time. That's how I vision a future 3 to 5 years from now.
Sounds good to me.
Yeah.
What are your thoughts? Do you have
love
any?
it. I need to sit down and talk with him a little bit
Okay.
more.
So your thought is you want to talk to Mitch some more over the next 5 years.
I do. I like that.
Yeah.
You know, when I think about this, I think I think you're right. I mean, I just think more and more technology, but I think about just continued consolidation. There's been a lot of consolidation in the market in the past 10 years. There's going to continue to be consolidation, and so it kind of goes back to what you said earlier. Who's actually making a intentional choice to be irrelevant or to become obsolete? And so I just think that there'll be consolidation, and I think about the fact that to me, there are two ways to deliver a quick service. One is technology, and one is you just completely ignore risk management, right?
Yep.
And so, which neither is a very successful option. And so, I mean, I think as we go forward, there'll be consolidation in the market. I think the banks that have the technology are going to kind of acquire banks that maybe are not able to deliver this service as well, and we'll see the technology. I mean, that's the way forward. There's
Right.
no going back.
Yep.
So I think if banks have a desire to remain independent and autonomous, I mean, you've got to choose to make that like right now.
Yeah.
Yes.
Or as Yoram said, or I think it was like in the past.
Right.
So
Yeah, in the past.
So Yoram, knowing that you are a serial entrepreneur, I don't want you to give away any of your future ideas for the next 5 to 10 years and what may be coming, but what are your overall general thoughts on this?
I completely agree with what Mitch said, and this is actually our vision, and this is the solutions that we have. Today, I have my entire financial identity here on this distributed device, and I simply select a checklist that I can get from any bank about what they need. In a click of a button, they can get that data from me, verified. And therefore, coming back to your question, what is the future of lending? I think like 70 to 80% of the current lending processes can be fully automated and have almost no human touch in them. I think there are many financial online lenders that today on the small tickets do completely automated lending. And as technology evolves and those more complex processes, like in commercial banking, where you have several parties that are involved with the borrower and collaterals and so forth, this can also be completely automated. So maybe there is some expert there that makes the decision. Maybe a software can make some of the decisions. But I think the future of lending is completely automating these processes end to end and more focusing on unique models, on unique loan products. We are, in the specialty lending, we are working with lenders that come up with loans that are very innovative and they can adopt them in minutes. So the competition is no longer about a certain geography. It can be borderless. The competition is about unique, tailored loan product that can be deployed nationwide, worldwide, and be automated. So you can cope with the load with a very nimble and efficient team.
Great. Well, great to hear all of your thoughts on this and the other things that we've discussed so far. I'm hopeful that you as the audience have enjoyed our discussion today and would love to hear feedback from you regarding your FI and how you're handling this technology shift and how Finastra and our partners like Yoram can be of assistance to you. I also like to thank our panelists and Finastra in general for providing us with this forum. And for those of you that are interested in beginning, continuing, or completing the modernization of your lending processes, love for you to visit finastra.com. There's a Contact Us button in the very top right, and you can provide us with the information on where you are, where you want to be, and we can have the appropriate specialist reach out to you personally. So again, appreciate you guys for joining us and look forward to hearing from you soon.